welcome to Sectors Up Close. I'm Elena Casas. Our focus today is on top consumer brands, and our guest is Ross Gerber, the president and CEO of Gerber Kawasaki. Well-known consumer brands, including Nike, Starbucks, Home Depot and Amazon, are part of a broad sector, consumer discretionary, which also includes car makers and hotels. The Consumer Discretionary Select Sector Index and the ETFs that track it are up 12% this year, so lagging the wider market. This sector has yet to fully recover from the pandemic, and it's now being disrupted by labour and supply chain shortages. And while US consumer spending surged last quarter, much of that money has shifted to services away from goods, which resulted in a surprise drop in core retail sales last month of about 1%. Still, big brick-and-mortar retailers, including Walmart, are optimistic things will get better. Many retailers raise their sales outlook on optimism shoppers will return to buy more clothes and back-to-school items as America exits the pandemic. So what's the outlook for this sector and which kinds of brands will fare the best? Let's ask Ross Gerber of Gerber Kawasaki. Hi Ross. So given a relatively recent underperformance in some of these companies, what is your outlook? Do you think that the labour and supply chain bottlenecks are just temporary?
Yeah, I think they're temporary, but I don't think they're going to be resolved that quickly, probably over the next year, not over the next 3 or 4 months. And I think, that's going to be the big challenge for all companies, which is actually a kind of a good challenge, which is, can I keep enough goods out there for people to buy? And if you have the product, people are buying it. And we haven't seen this much demand and such a strong consumer in as long as I can remember.
What then do you really like in this space and why?
Well, you named several of the stocks we own in my fund GK, including Amazon, Home Depot, Starbucks, and Nike. In particular, Nike's been doing phenomenally well with the athleisure and just the focus on sports and the sports season starting. But we also have stocks like Petco in the pet industry and Callaway in the sports industry, which are consumer, products and brands around other areas that people are spending money on, like sports and their pets. But the bottom line is the consumer is strong. We just recently added Target for the back to school season and the Christmas season coming. So we expect a very strong Christmas season, and we expect the omni-channel method to be the best overall business model today because a lot of people are going back to the stores.
But there have to be losers in this space. So which retailers and consumer brands do you think will disappoint coming out of the pandemic?
I think that, it's pretty much everybody's kind of winning right now. But I think the people who have been weaker at their supply chains and being able to keep inventory will show, very strong sales, but not as much profit. So I don't see a lot of losers. I think that, companies like Amazon are under threat from the Targets, the Walmarts, and many other competitors. But I still think Amazon wins. So we're very bullish on the sector. We're very overweight on the sector at my firm and in my fund.
But do you think consumer brands are adapting well enough across the board, all of them, to this new shopping environment, which, as you say, has changed a lot during the pandemic?
Well, it's adapt or die. And that's been sort of the reality of the pandemic, is that brands that have been able to adapt to an online sales model have boomed, like Nike, where we've seen just sales go up and up, and then the stores reopen and we see no abatement in demand in store as well. Same thing we're seeing with Targets online. Another company that reported very well today is Ulta, which is putting a lot of Ulta stores in Targets. We're seeing Disney stores in Targets. So we're very, once again, bullish on the sector and going into Christmas. And I think the consumer's in a great place to spend money.
Thanks so much for that. That was Ross Gerber, the president and CEO of Gerber Kawasaki. Well, before I go, here are some of the top stories in the sector. The top 2 US dollar stores have warned full-year profits will be hit by higher transport costs. Dollar Tree said bottlenecks could hit inventories, while Dollar General said higher costs resulted in lower margins in the second quarter. Increasing freight costs and those supply chain disruptions have hit all industries, but they could hit dollar stores especially hard because they operate on razor-thin margins. Cosmetic maker Coty says it expects to return to annual sales growth for the first time in at least 3 years, as people once again spend on fragrances and beauty products. Revenue at its prestige division, which makes the Gucci and Marc Jacobs branded fragrances, surged 160% to $570 million in its fourth quarter. And Australia's Woolworths Group announced a $1.5 billion share buyback and reported a 20% jump in annual profit as lockdowns sparked demand for household essentials. Australia's biggest supermarket chain also said it's recorded strong sales growth so far in the new fiscal year as a return to lockdowns in large parts of Australia and New Zealand once again prompted stockpiling. And that's your roundup of the consumer space. I'm Elena Casas, and this is Reuters.